Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a filing from BrightSpire Capital, and let me tell you, it involves some boardroom drama with accountants that's juicier than your average office potluck. Think of it as a financial version of The Bachelor, but instead of roses, it's all about auditing firms. The main event happened in February 2025. BrightSpire Capital decided to switch up their independent registered public accounting firm, which is like changing your financial doctor. What exactly happened? Well, BrightSpire decided to hold a competition, a bake-off if you will, to choose their accounting firm for the year. Ernst & Young, or E&Y, who had been doing the job, was invited to participate, but in the end, they got the boot. Deloitte & Touche LLP, or Deloitte, is the new sheriff in town. BrightSpire's Audit Committee, that's the group in the company that watches over the company's financial reporting, approved hiring Deloitte to handle their books for the year. They also gave E&Y their walking papers, effective immediately. Now, this is important. The reports from E&Y for the past couple of years didn't have any major red flags. There were no disagreements that would have made E&Y raise serious concerns in their reports. Basically, E&Y gave BrightSpire a clean bill of health when it came to their financial statements. The filing makes a point to say that there were no disagreements between BrightSpire and E&Y about how they handled the accounting or what they showed in the financial statements. These disagreements, according to something called Regulation SK, are big deals. If they weren't sorted out, E&Y would have had to mention them in their reports, which would have been bad news for BrightSpire. There also weren't any reportable events, which are basically situations that the company's auditors need to tell the higher-ups about. These events can be things like fraud, illegal acts, or big problems with the company's internal controls, and it seems like there were none of these, so that's good. Here's another key piece of information. BrightSpire didn't talk to Deloitte about how to handle specific transactions or what kind of audit opinion they might give. This is to make sure that everything is fair and above board, so the new accounting firm doesn't have an unfair advantage or give a biased opinion. To make sure everyone is on the same page, BrightSpire gave E&Y a copy of what they were saying in this report and asked them if they agreed with it. E&Y wrote a letter back saying whether they agreed or disagreed, and that letter is included with this report. Indeed, there is a letter from Ernst & Young LLP to the Securities and Exchange Commission. This letter confirms that E&Y agrees with the statements BrightSpire made about their relationship, which adds another layer of assurance. Before we get into my opinion of the situation, let's take a quick look at BrightSpire's stock. Their Class A common stock trades under the ticker symbol BRSB on the New York Stock Exchange, so if you're interested in tracking their performance, that's where you can find them. Now let's talk about the big picture. It seems that BrightSpire has made a pretty significant move by switching accounting firms. What does this mean for the company? Well, it could signal a number of things. Maybe they were looking for a fresh perspective on their financials, or perhaps they thought Deloitte could offer them better service.